So let's take a look at the first question. Once again, this question deals with deferred taxes. With regard to deferred taxes, the use of the installment sales method for tax purposes would typically result in what? So if we use the installment sales method for tax purposes, what does it result into? Does it result into a deferred tax asset? Does it result into deferred tax liability? Both or neither? So the best way to approach this topic, this is how I teach deferred taxes on my website, is to look at how do we do this? How do we do things for taxes, and how do we do things for GAAP? So how do we do things for IRS, and how do we do things for GAAP? So if we're using the installment method for tax purposes, what is the installment method? The installment method means every time you receive money, it's installment, you have a taxable transaction. Well, under the GAAP method, guess what? If you sell something under the GAAP method, if you completed the transaction, you don't have to wait for the cash. So if you sold something for, let's assume you sold something for $10,000, and you're going to receive 5 payments of $2,000. So you made the sale is completed, you debit your account receivable, you credit sales $10,000. This is what you did. But guess what? You're gonna be paid. This is year 1. So this is for year 1. You're not gonna get anything for year 1. What's gonna happen is this: starting in year 2, you're gonna start to receive the money, and you're gonna be receiving, let's make it 2 payments. So you're gonna be receiving year 2 and year 3. So as far as GAAP, the sales is recorded in year 1. As far as tax, you don't do anything for tax purposes because you did not receive any money for the sale. In other words, it's not really a sale, it's not a taxable event. But here's what's going to happen. As soon as you booked $10,000 in sales, this is going to generate kind of a future tax liability. Why? Because what's going to happen in year 2 and year 3, you're going to get $5,000 and $5,000. Therefore, in year 2, you debit cash $5,000, you'll credit sales $5,000, and in year 3, you will debit cash $5,000, and you will credit sales $5,000. What does that mean? It means for tax purposes, you're going to have a future $10,000 of revenue, which you already accounted for under GAAP. What does that mean? That's going to give you a future tax liability. If you have a future revenue that's going to be taxable, that's basically the definition of a future tax liability. You're going to have an obligation down the road to pay taxes. In year 2 and year 3, what's going to happen when you, for GAAP, all you have to do is debit cash, credit receivable for $5,000 every year. So you have no revenue. The revenue will start to appear on your taxes in year 2 and year 3, which in turn gives you a future tax liability. So it's very important. So why is deferred taxes challenging? I'm not going to say difficult, because you need to know your knowledge from tax, you need to know accounting rules, and you need to combine those two together. So you need to know your tax and your accounting principles and how do they interact together. So it's very important that you have a good understanding about this topic. And I could assure you, many students, when they come to me for help, usually that's the topic that they're being challenged with. It's either this or pension. Those are the 2 main topics.
Want to see more CPA exam multiple choice questions solved step by step? At farhatlectures.com, you will get hundreds of video solved MCQs step by step, including previously released AI CPA questions, previously released AI CPA simulation, in-depth lectures and resources to prepare for the CPA exam, AI tools that's going to help you study smarter, not harder, CPA exam podcast lessons where you can learn on the go. And also you will get the personal guidance of support of Farhat and his team. If you are serious about passing the CPA exam, this is your next step. Visit the website farhatlectures.com, start your free trial, and I hope to see you on the website.